So really the benefit of the tight range, it allows you to enter at a spot where you can manage risk that much tighter and therefore size a little bit bigger if you're more experienced, or just keep overall your risk management in check and basically have a cushion going into the spot where there's likely to be some volatility. And that allows you to sit through any pullback here and let the stock work and let the stock trend. So that's the big benefit of buying a little bit earlier, is we're not trying to buy the low of the base necessarily, but we're trying to find spots where we can manage risk at the right hand side. And if we're right, we get in a little bit earlier, a better cost, and are able to sit with any, normal natural reactions, as Mark Vinavini likes to say. Here's the Google IPO basic here. Again, we've got to push higher, start to form a base. These IPO bases can be a lot shorter than normal bases, and we see very tight action near the bottom of this base. And then we get the breakout. We get an inside day priming the setup before this breakout and enter, and you're off to the races. And this is one of the obviously best stocks in history here with Google. Here's a very recent example with CoreWeave. We've got strong power off the initial days of the IPO. Pullback here. We try to break lower, but instead, pull back into the base and respond nicely, and then form a nice tight range. RMV going to 0. You can draw the pivot across. We get a gap above it, retest of it, and then strong action the rest of the day. There's another spot here. RMV going to 0. You can draw that pivot across where you get another positive expectation breaker, and you're off to the races again, about 300% in about 35 days. So again, RMV can really help with these faster IPOs to identify the first tight range within the IPO base. That's what we're really looking for the first or second tight range here within the IPO base. That's often a great spot to get into. You can see there's a little bit of volatility here at the actual pivot, but this helps you get in earlier and potentially participate in a strong move like this, which was definitely an outlier, but can really happen with IPOs, and you want to be involved when it does happen. Here's FSLR back in 2007, just to show, this happens throughout history. We've got a typical base within the context of a longer term uptrend. We have a tight area that forms right near the 21 EMA. This would have been a potential buy point here. It pulls back into that level of response again, and then right below the base pivot, again, looking for confluence here, right below that key level, we get the next tight area that forms. RMB goes to 0. And then that's your signal, say, hey, watch this for a breakout, watch this for a breakout of this tight range. That would also coincide with that confluence of breaking through the base pivot. So that's what we're looking for, confluence, and just more reason that the stock is going to expand quickly from that area. If instead the stock just went straight off the bottom and approached the pivot here, there's not as much juice left to really start the trend and get it going, versus here you've got contraction right before it, so when it gets going it can trend a little bit nicer and cleaner after it breaks out. Here is Palo Alto Networks. You've got a base here. This is more of a bottoming base, but we get a strong move higher and then a tight contraction after this gap.